Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, let's take a look and see what happened in the stock market today. We are looking at the S&P 500 E-mini, S&P 500 futures, okay, /ES. Could also trade to /MES. Okay, those are the micros. Okay, so for smaller accounts, a lot of people like to trade those. Pretty decent candlestick today. Basically got some sideways chop going on here, guys. And I talked about this being one of the possible scenarios that we're just going to get sideways chop. It looks like the market does want to break above. You know, like it's trying to do one of those. And I think there's a decent chance it is going to do that. Decent chance. Had a guy comment in one of my, I think it was the S&P 500 review video, the same as this video, but yesterday he says maybe and if and that's not technical analysis, and I deal with trolls all the time. It just comes to the territory. And I was going to say to him, well, when you find that perfect YouTube channel that tells everybody exactly what the market's going to do with 100% accuracy, just let us know and we'll all become subscribers. Heck, I'll even pay for a subscription for that one, right? I mean, who wouldn't? These people are hilarious, Of course, they never provide their own technical analysis over any serious length of time because they can't, or they're not willing to. Because you want to know why? They don't want to have to admit that they can't get it right every time either. It's really hilarious. So anyway, I did talk about sideways chop, and that's, to me, what looks like is happening. I still think there's a chance, okay, even for the trolls, who don't like when they hear someone say chance because they don't consider technical analysis. But oh well, don't watch the content. There's other channels, Bye, have a nice day. They come watch the content anyway. I don't understand why. If you don't like the content, just turn the channel. It's really that simple, Funny. But yet they still come watch the content because they can't find that YouTube channel that tells them every time 100% how to make a trade, Because the truth is nobody can do it. But on this channel, we try to keep it real. Okay, and we use cycle analysis, as you can see here. As part of our analysis, we use cycle analysis. Okay, we use the 50 moving average, which is a very strong indicator, or a very strong means to try to figure out strength or weakness in the market. We obviously have indicators here, and here, right? I have my own Big Daddy forecast that a lot of times is very accurate. So, there you go. And my probably 25 or 30 years of experience of trading many different products and things. So that's what you got going on. That's what the members are paying $5.99 for. Okay, I keep it cheap so everybody can afford it. And there you go. And some traders have done very, very well. The less experienced traders are going to struggle no matter what their membership is. Okay, but hopefully over time they get better at trading. That's the whole goal, right? All right. So anyway, I see this kind of as a choppy market. I think there is a chance it's going to go higher. Okay, but at the same time, we have this, what could counteract the prices going higher is we have these cycle lows that are due. One's due like in about 2 to 4 days, which that would put us like Monday or Tuesday, whatever. Okay, another is due like the day, some of them say Christmas Eve, some say the day after Christmas. So, that could counteract prices anywhere from like right here. And let me clear that. Okay, what day is that right there? That's December 15th. Okay, anywhere from December 15th all the way out to like the day after Christmas. Okay, somewhere over here. That's the area where I think there's potential for price to decline. Now, it may not decline far as this arrow is pointing down. I'm just generally saying that prices could decline because of this cycle low, all right? So I think we got two things influencing price, right? There is the overall tendency here for prices to go up, right? Because we've come out of this low here. But there's cycle lows that are here and here that are potentially going to try to push price down. So we're like kind of in between is the way I see this. And you know what, guys? It makes sense. There's chop. It makes perfect sense. Prices are trying to go up, right? But we have cycle lows. So it makes perfect sense to me that you would have chop in that scenario, okay? So we have to continue to wait to see, do these cycle lows push prices down, or do we just have this kind of this balancing act going on where there's chop, you know. That's what I see going on right now. Overall, we can't ignore the simple fact that the 50-day moving average is still like climbing Mount Everest here, right? It's pointing at like a 45-degree angle here, or 35-degree angle. That's very strong. There's no getting around that. Okay. So overall, the market's definitely, leaning towards the strong side. Okay. But that doesn't necessarily mean we're going to break the all-time new highs just yet. So I do see an expansion going on here, guys, the last 3 days. Like this little expansion, at least to the downside. Okay. There's not really much to go on there yet. But to the downside, there's an expansion going on, right? You can see it, right? That the lows have gotten lower, but the highs have pretty much straight across. Now, there's no guarantee that's going to continue, but if it were, and this is a big if, for all those who don't like to hear ifs in technical analysis, oh well, deal with it or not. You'd have one of these deals, right? If that were to continue, right? Where the highs stay pretty much flat, but the lows are getting lower, okay? If that's true, we'll have to wait to see how this goes, but we'll talk about that later, the old bouncy that happens, okay? So that's way too early to tell for sure that that's what's happening. But just kind of throwing that out there based on these 3 candlesticks I'm observing here, okay? All right. So before I move on to the monthly, before I move on to the weekly, what is my take? Do I think what the market's going to do? If I had to take a pick, I see chop. That's what I'm seeing, and I think that's the best chance that you're going to continue to see chop, okay? And if we get a really strong breakout day, great, trade it. Here's the thing that I think that really confuses a lot of traders, especially people who can't trade intraday. Let me just address intraday first. So intraday, guys, in my opinion, is less risk because you're holding positions for a less amount of time, okay? And you're not allowing for big movements. So your stop losses are usually going to be tighter. That's the benefit to intraday. Okay, you have more control over your risk because it's on a shorter time frame. That's the way I see it. Some people may disagree, but that's the way I see it. The shorter the time frame, the tighter your stop losses are going to be. Okay, so there are certain benefits to intraday. Some intraday traders get a little too narrow and they just focus on really small time frames like 1 minute and 5 minute, and they don't pay attention as much as they should to the longer time frames. And sometimes I think it hurts day traders. Okay, so I advocate looking at multiple time frames, monthly, weekly, daily, hourly, and even 5 minute. If you're really super aggressive, 1 minute, whatever, you should be looking at those every day, those multiple time frames, okay? It's really important, okay? Now, for people who are working jobs and raising families and doing all kinds of other stuff and can't do intraday, I totally get it because I'm there myself. I don't get to do a lot of intraday, okay? Some of you may be surprised to hear that. I run a business and I do other stuff, okay? Sometimes I can intraday, sometimes I can't. So that's going to get into swing trading. Okay, that's a little bit harder because you're holding positions for days, sometimes even a week or two. All right, that's definitely more difficult. Right now, it's going to be really difficult for me to tell swing traders, "Oh, just go long. Don't worry about it." Seriously, go long. You can't tell a swing trader, "Just go long. Don't worry about it." No, can't do that. Because I don't think that's a good opinion, since we have to do this as an opinion and not as advice, right? I don't give advice. My opinion is it would be bad to give an opinion about going long right now because it looks choppy. If I saw another green candlestick, okay, I might say, okay, take a small, but here's the thing. Here's another thing too you got to understand. On swing trades, you got to take smaller positions. You can't take as big a position as you can on intraday. Intraday, you can go for it. You can do mid-sized positions, even large positions, because you're going to have control over your risk management because your stop losses are going to be tighter and you're only doing intraday. With swing trades, generally speaking, you got to take a smaller position because you could miss it. And you're relying on, you're away from your computer or whatever mobile device or whatever you're doing. You're not sitting in front of it because you're working your job. Okay, and you're relying on your stop losses to stop out to protect you, but you got to give them more breathing room on swing trades. Okay, everybody feel me now? So for those people who come to my YouTube channel, I wouldn't be so critical. It's not as easy as you think it is. Looking for the perfect technical analysis person. Yeah, good luck with that. Like I said, when you find them, come back to my channel and leave a comment on the person who hits it 100% all the time, and I'll go subscribe to them, okay? So that's my take on the difference between intraday and those that do swing trades. Right now, I would not tell somebody to trade long or short on the S&P 500 because it looks like chop. If I see 2 red down days, okay, if I saw, okay, for instance, let's say we got this candlestick right here, and you got this big green candlestick right there, I would tell them, if you get a candlestick tomorrow that's like halfway down on this candlestick, take a small position to the short side. Let's see how it plays out. It's heading towards the 50-day. Okay, that's my opinion. I think that's a good chance we'll make some money there. I would tell them, opinion-wise only, to keep your stop losses kind of tight, but give it a little bit of breathing room. Be prepared that you may have to give it up. Okay, because that's swing trading. That's the way it goes. Okay, and by the same token, from where we're at right now, if I see a green candlestick tomorrow, okay, and as a matter of fact, I'm going to say this right now, okay, if you get a green candlestick tomorrow, okay, and if it starts on the next session right where this one left off and doesn't do some wacky gap down, okay, and it gets up about, a quarter of the way up of this candlestick, the same distance, a quarter way up, then just trade it long as a swing trade. Keep your position small, really small, like one contract on the MES, because you want a successful trade, right? You don't want to be taking big losses. On swing trades, it's going to be really, really difficult, like I said, to take big positions. It's just too risky. Now, I know people are going to disagree with me, and that's fine. Let them disagree. Go ahead. Everybody's got their own opinion, okay? But I would opinion this to say, take a small position, 1 or 2 contracts, when it's about a quarter or a third of the way above this candlestick, above that one. Go long. Keep your stop loss kind of tight, okay? Have a realistic exit. Be happy with $200, $100. Be happy with it. You're working a job. Be happy with $150 or $200. If your account's much larger, fine. Then your number is going to be bigger. You're going to be trading maybe ES rather than MES. Okay. So be happy with small incremental trades that make you profit. I talked to one of our premium members just last night or yesterday, and we kind of had this discussion. And I'm not going to mention their name, of course, but would you be happy with $100 a day? That's $500 a week. Would you be happy with $50 a day? That's $250 a week. For some of you, maybe that's $300 a day or $200 a day. Okay, set realistic goals. This isn't the lotto. You're not trying to win the lotto all in one day. Just be realistic. Okay, I know this video is long, but I think it's worth it to have this discussion so that not only premium members who may watch this content, as a matter of fact, I'm going to make sure they get it as a part of the premium video in addition to the hourly chart and the 5-minute chart, okay? But this is for everybody, okay? So that's my take. Tomorrow, if you get a green candlestick, as soon as it gets 25% up, just trade it. There's no guarantee it won't pull back and drop down, okay? If tomorrow starts here, the next session starts, which is going to start here like in a half an hour or whatever, okay? But it doesn't really matter. A lot of you only trade the regular session, and I that's a real detriment. I'm just going to say it. If you don't have a futures account, do what you can to get one, because it's really beneficial to be able to trade at the open, not the intraday open session, but the futures open. That's a huge difference between the two, and you can take advantage of overnight trading. I'm not saying you're going to make $1 million or get some big movements overnight. Usually we don't, but there's sometimes, just from the charts and the technical analysis, you can see an opportunity as a swing trader. Okay, day traders may not do this. Some do, some don't. I know some that do. Okay, they trade at night as well. Okay, so if you don't have a futures account, this is going to be a lot harder for you because you're relegated to the day session. And frankly, forgive my language, but that kind of sucks. Yes, there's margin advantages to the day session, but there's big disadvantages because you don't get to take advantage of price changes outside of the day session. And I think personally, that's not the best way to go, okay? So try to get a futures account if you can, especially you guys and gals that are trading options. My goodness, if you're already trading options, you're one little micro step away from trading futures. Just do it already, okay? If tomorrow is a red day, we start there and it starts going down, just trade it short. Again, keep your stop losses kind of tight, keep your position small, okay? You're going to have to figure out and navigate how far away do you want your stop loss. I can't really tell you because everybody's account's different. You're going to have to figure that out. What is the best distance for your stop loss? Okay? And again, in my opinion, start small, keep it small, keep your exits on your limit orders for taking profit. In other words, one side's the stop loss to get you out on us, to prevent from big losses. The other side's going to be your limit, or even possibly, guys and gals, a trailing stop if you're already profitable. I talk about that all the time. Okay? Be realistic. Be happy with $100. Be happy with 150, 200, whatever it is. Be realistic with those small profits. If you have a really, really small account, be happy with $70, $60, whatever it is. Just think about that. Just think about it. Even if you only did 3 days a week, $100, that's still $300 a week. Okay, it helps pay for the bills. It helps diapers for the kids. It helps put gas in the car. It puts food on the table. Hopefully in addition to your other day job. For swing traders I'm talking to right now. Even intraday people who stink at trading, this will work for you really well. Okay? All right, that's 101. Let's move on to the monthly. 101 trading here. Keeping it basic. December looks very strong, the candlestick itself. Okay? Nothing's changed here. Divergence signals are telling us the future is going down. I don't mean futures product. I just mean the S&P 500. Right? These indicators with these dots, just keeping it super simple, are telling us be prepared on a monthly time frame for the S&P 500 to decline. There's a real good chance it's going to do that. That's what that's saying. This, for right now, the MACD, shoot to the moon, Alice. Still wants to go to the moon. Very simple analysis. Okay? It's important to understand those long time frames. Always keep that in the back of your mind. Always. This week is huge strong. Huge. Nice rebound. Very strong. Well away from the 50. Sorry. Look at this massive gap. This two weeks down got nowhere near the 50. Okay? That's strong. That's just strength on the weekly. Okay? All right. Let's go back and look at the daily one more time. I'm going to look at these two daily cycles, though I've talked about this many times. Okay, this is a right around anywhere from Christmas Eve to about a day or two after Christmas. This one is actually in about, today's the 10th, so 11, 12, 13, 14, 15. This one's about Wednesday of next week. I think it's 12:15 here, okay? That's about 12:15, okay? So keep that in mind. There's a tendency for prices to decline into this time frame, okay? Right, I've already talked about how I think you should trade, in my opinion, tomorrow if you get green or if you get red. All right, let's switch over to premium members, the hourly chart. Let's see what's going on here. Hourly chart. What do I think? Okay. Just real briefly here. I know some of you are probably struggling how to trade, and some of you don't have the time to trade the intraday stuff. And you heard me, you heard in this video already. I'll try to put it in there. I know this video is long, but I'm sorry, guys. Sometimes they have to be long. Okay, if you don't know what a swing trade is, just go look it up, guys. Favorite search engine. I use DuckDuckGo. I don't like to use Google. If I can get, for a lot of reasons, I don't like using Google. Use whatever search engine you want. Okay, just go look up swing trade. Just get the basic understanding what a swing trade is. Okay. All right, let's look at the hourly chart here. So today started, I believe, yeah, I just watched Star Wars 1 last night, so excuse the thematic song. Yeah, was today tradable? It was from last night. Was the day session tradable? Garbage. That candlestick's probably pretty tradable. And yeah, these two could have been tradable as well. No doubt about it. But the real trade, in my opinion, started at 1 a.m. my time. Right there. Okay, I know someone can say, but you always said don't trade below the 50. And that's true. But on the daily, chop, 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 we're chopping sideways. So in choppy markets, choppy sideways, I don't mind trading long or short in the old chop zone. Okay, and remember, we're well above the 50. So it's okay to trade long here. Okay, we're chopping sideways and we're above the 50. Okay, I'm personally going to favor on the hourly chart and intraday stuff, I'm going to favor long side trades because we're well above the 50 and chop is good enough for me to trade long. So I would have traded this candlestick and I would have stayed in it there, there. Okay, hard to tell if I'd stayed in that one because there obviously it was down. Okay, but I just probably would have stayed in this, especially as I see the MACD beginning to widen. Okay, spread that sucker out. Get that MACD spread it out. Let it be your friend. Okay, I see the MACD is beginning to widen. On the average, I see these guys are going up. Okay, maybe you don't have this indicator, but you got this one, SMI. It's going up. My goodness, look at these divergence warnings on the hourly. What a beautiful thing. And it's going up, and it's going up. And you got stopped out right there. Okay, so you traded 1, 2, 3, 4, 5 candlesticks. You went from approximately, which that's a little bit like watching paint dry, but in any case, it opened up at 4663. You probably got out somewhere in here about, I don't know, the close was 4674. Guys, that's about, even conservatively, that's about 7 or 8 or 9 points worth of profit. Okay? Is that good money? Yeah, it's good money. Even trading MES. That's the $100 I was talking about. That's the $200 I was talking about that I just got done talking about. That's it. That's your trade for the day. Don't do stupid stuff. So many people re-enter the market and they lose money they made. Sometimes they lose it all. I know. I've been there. I've done it myself. See how I keep it real on this channel? Don't do that. Once you got your $100 or $200 a day, that's done. I understand some premium members are going to be more like $400 or $500 or $750 a day or whatever. Okay, that's great. You should know your account size. Okay? And I've said it before, and I'm going to say it again. I'm repeating myself, but if you made $100 a day or $150 or $75 or $200 a day, would you be happy? I know I would be. That's $500 to $1,000 a week. The thing, guys, is smart trading over time. Not I'm going for the home run every day. That's going to kill you. That's not trading. That's insanity. Okay? So that's how I would have traded that. I would have traded this a lot more than I would have traded all this junk. Junk sitting on the 50. Yes, there's opportunity there because there was big candlesticks. I don't dispute that. And I understand there's going to be intraday people that know how to trade that. Go for it. I have no qualms whatsoever. Trade that, especially that candlestick right there. That was a nice candlestick there at the end of the day. What was that, 2 o'clock my time? 2 o'clock my time. It's a nice candlestick. There's no getting around it. As soon as that candlestick especially got above that upper wick, you could take advantage of that whole, about whatever, 5/8 of that candlestick. You could trade that whole thing, and 5/8 of it, more than half of it, and make some nice money there, okay? All right. There's no reason to look at the 5-minute, guys. This hourly tells me everything I need to know. This was the trade of the day, right there. And then that little bad boy right there, that big candlestick, okay? All right, guys and gals, that's it. I'll do all the other futures products on the All Products Futures video with the timestamps and all that stuff in the description. Talk to y'all real soon again next time.